Hi, I'm Jim Jubek, and welcome to my YouTube video for Wednesday, July 19th. Today's topic is not the weather or heat, but in August I will be doing a special report that at the moment is tentatively titled Investing in a Global Climate Catastrophe. In there is kind of the crucial word because it means both during, as in what do you do about your house, probably one of your largest financial investments in this period. It also means investing in, as meaning can we find some stocks that do that. This week's quick pick tomorrow follows in that theme, so kind of a little preview. But anyway, so if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do the next one. We're doing about 3 a week. But it's summer and the schedule's a little flexy, so we're working around vacations and moves. And I'm moving Jubek Asset Management to a so far undisclosed location in September. But I will tell you about that in the coming weeks. No disruption to the service, no disruption to anything other than where I will be. If you want more of my stuff, you can go to jubekpicks.com. That's got 3 portfolios: dividend portfolio, longer term, shorter term, and that's free. Or you can subscribe. That's jubekam.com. That's got 6 portfolios, including some really long term, also some really short term volatility portfolio. And you can find links to all those down below. Okay, we're right in the middle, in the middle of earnings season, but it's a kind of hiatus between bank earnings and tech earnings. Bank earnings kicked off last week. We got JPMorgan Chase on Friday and Bank of America on Tuesday. Next week, we'll start to get tech earnings with Apple and Microsoft and all that. But right now, it's important, and here's the topic. Earnings, it's all about surprise. And bank earnings have been a great reminder that in earnings season, companies that meet expectations, even in this worried market, probably don't go anywhere. It's companies that surprise, either positive or negative, that move the stocks. Okay, here's a great example. On Friday, July 14th, JPMorgan Chase came out with earnings. They were first big bank to report. They blew it away. They demolished expectations. They announced a quarter that the greatest thing since sliced bread. And the stock just soared by 0.6% on the day. And that's because everyone was expecting JPMorgan to do really well. And JPMorgan didn't move the sector. In fact, the sector went by and large down because people said, oh, the things that made JPMorgan so special this quarter are things that other banks don't have. So this really wasn't good news for the banking sector. Okay, flash forward to July 18th when Bank of America announced earnings. And Bank of America popped by 4.2% on also really, really good earnings. They also moved a lot of other stocks in the sector. And in fact, they moved the entire banking index up 2.29%. And the reason for that is that everybody has sort of expected that Bank of America would show good loan growth, and they did, and good deposit growth, and they did. But the big surprise, what they got a big bump from their Wall Street trading operations, fixed income and equities. And that produced a 14% rise in net interest income. But most of that came from the Wall Street trading operations, much of the growth. And here, on the same day, you had an example of a negative surprise. So PNC, which is a big regional bank, said, hey, we're going to cut our full year guidance from 6 to 8% down to 5.6%, 5 to 6%, and the stock, of course, fell. Okay, but let's look at a couple of charts. This is JPMorgan Chase. And one of the things you notice is look at the background for the earnings announcement, which comes way up in, at the extreme right. But the stock has been climbing really, really steadily since May. So that's the background for JPMorgan coming out and saying, oh, okay, so this is a stock that's been going up, so it'll probably go up some more, but hey, it's not a big surprise in the trend. Okay, contrast that to Bank of America, and you notice that this is the Bank of America chart that just zooming along down here, going nowhere. And so when you get the good news, it's a big surprise because it's based on this sort of disappointing trend. So that's why you get a 4.2% pop today from Bank of America on its earnings surprise, and no pop from JPMorgan on Friday. Good thing to remember as we go into earnings season for technology companies, because expectations there can be really quite high. Remember, this is the second quarter, and second and third quarter are typically the weakest for technology stocks. So the question is whether stocks which already have pretty high expectations can surprise on the upside, or whether we're going to see some downside surprises. One stock I look that's interesting here is Apple, because Apple, there have been a number of analysts that come out and talked about a slowdown in Apple growth for the quarter. Would be typical because they get another big bump in September. So Apple can go either way, but a good indicator for the course of technology, and they report early for the sector. So thanks very much for watching. If you enjoyed this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do our next one. We're doing about 3 a week, but not always on the same day during the summer chaos. If you want more of my stuff, you can go to jubakpicks.com. That's my free site that has 3 portfolios, including a dividend portfolio. Or you can go to my paid site, which is JubakAM, which has got 6 portfolios, including an ETF portfolio and some volatility portfolios, and some even longer term picks. So thanks for watching, and we'll talk to you next time.